back to Trading IQ, where we will learn the unlimited nature of the stock market. In today's video, I'm going to share very interesting things. So I'm going to practically apply all my trading setup and share how the market is currently performing. The market means Nifty 50. So we will use stage analysis and all the technical indicators that I've already taught you on my channel, which you can find on my playlist on technical analysis. So today I'm going to share all the technical indicators and stage analysis and determine whether the market is currently bullish, and then we'll subsequently look at few sectors which are performing best than the market, and then subsequently we'll try to identify stocks, right, and show you how you can also prepare and see whether this market is good for a buy or not. We'll see, right? So this video is going to be a little technical, so let's jump into my screen right now. So first, let's look at Nifty 50 and try to identify which stage it is currently in. And as per our trading setup, we can only consider buying a stock if the overall market is bullish. So let us first identify whether Nifty 50 is currently bullish or not, and also look at the stages it went through and which stage it is currently trading at, right? So here, this is the chart of Nifty 50, and this is a weekly chart that I'm looking at. And this line that you see, it is a 30-week moving average. So for Nifty 50, we won't be able to see relative strength because you cannot compare the market with market, right? So, and also volume is not there because Nifty 50 is not a traditional stocks where you would see volume. Though Nifty future options are being traded, but on the chart, you won't see volume for Nifty or for any other sectors we discussed in my previous video. So let's look at Nifty 50 since the time, before the time of the pandemic, when the pandemic hits around 2020. So it was trading, let me take a line here. So it was trading around 12,400, 12,430 before it started going down. So now let's look at this area. So which area is it based on stage? So isn't it in stage 3 because it is trading sideways? It is not going above and it is not breaking below, and it is consolidating just above the 30-week moving average. And you see the 30-week moving average was flattening out, right? It was not bullish. It was not had it upwards momentum. You see, it was flattening out, and here it was trading between two range. Now, since it is stage 3, so this is of course not an ideal time to buy or not to think of buying, because it is trading in stage 3 and it could go either way. If it goes up, then we could, of course, this is continuous setup, and if it goes down, then stage 4 will start, which in this case happened. So here, not only broke down the support level, but it also broke down the 30-week moving average with heavy red candle. And since then, you see, when it falls harder. So as you can see, it just fell from 12,430 to 7,500, almost 5,000 point in say 5 to 6 weeks, right? So every stage 4 comes with an opportunity. Why? Because as per the stage analysis, there are 4 stages: stage 1, 2, 3, 4, and it occurs in sequence. So stage 1 happens, and then stage 2, 3, 4, and after stage 4, we'll see stage 1. So what is stage 1? Where the market or the stock is consolidating just below the 30-week moving average, and before it gains its momentum back and break out of stage 1 and goes into stage 2. So in terms of Nifty 50, we'll see how after stage 4, it created stage 1, and then it broke out of stage 1 to stage 2, when you ideally should have entered and think of buying different other stocks, because Here for Nifty 50, what we are trying to identify is whether what the market is doing, what the market is telling, right? So accordingly, we will act and we'll see different sectors and see different stocks. So let's again see what happened after stage 4. So here, after this heavy beating, it started to gain its momentum back, but it was trading below its 30-week moving average. Now here you see this was a support level, right? Nifty it started from around 2018, November 2018. It started a trading range just below the 30-week moving average here, and then it took a support here again. So it was acting as a support level. Since this is weekly, so every touch on the support would increase its significance. So here it saw many touches, right? So it eventually broke down in the time of the pandemic. Well, it broke down the 30-week moving average. So this is not the time to be in any stocks. You should look for short selling, which I'll teach you later in my channel. What is short selling? You could also earn profit from selling short. Now since it broke down the support level. So as per the theory, a support level when it broke down, it will act as resistance. Now you see after the heavy beating, Nifty was trying to gain its upward momentum, and it eventually broke out of that resistance level as well as the 30-week moving average here at this point. Here is the ideal time to enter, to look for buy, because the overall market has moved from stage 1. So it saw stage 4, then this is stage 1. While it was consolidating here, you see a consolidation somewhere here, and then it eventually broke out of that resistance level, right? Now let's see how it behaved since it moved to stage 2. Now along the way, it saw some pullbacks. Now what are these pullbacks, right? So pullbacks are those areas where people are taking profits out of the market. And it is really healthy. Market cannot go in one direction, and if it goes in one direction, like for the case in Bitcoin, it happened. It saw a huge fall off after it went up. So market cannot go in one direction, and it is not healthy. There has to be a little pullback. People should take profits, and there has to be little pullbacks. Not such pullbacks like this you see in stage 4, right? When it is breaking out of the moving average. So until unless the pullback is within the above the 30-week moving average, it is all fine. Life is good, right? Now you will have to look for areas where it created trading range. So along the way, let's suppose here it created a range. So let me draw both support and resistance. So as you can see, here, after moving to stage 2, it saw quite a fascinating show, right? It advances very quickly. It recovered very quickly since it broke down. Since it saw the stage 4, it recovered very fast. Now here at this area, you see the Nifty 50 is trading between two range, right? Again, so this is now again stage 3, right? Because you do not know whether the Nifty 50 would break out of this range, or it break down and breaks below its 30-week moving average. So you cannot know, right? Unless it tells you, right? So market has to tell you what it is doing, and accordingly you have to react. That's how you have to work on, right? So now it created a trading range here, right? And it eventually broke out of that level. So while it is trading at this range, you should ideally don't look for buys, right? You should wait and hold your positions that you took in the past, right? When it moved into stage 2. Don't take new positions when the overall market is in stage 3. Just hold on to your previous positions and put your stop loss. So I'll share how you can advance your stop loss to protect your profits. So I'll share that in my channel and my upcoming videos. So once it broke out of this trading range, it again formed another trading range. So this is stage 3, and again continuous setup, and then again stage 3. and it eventually broke out again here, right? And now, by the way, this is live market, so you see price is moving. So now it is a continuous setup. Now, as you can see, there are a couple of hurdles in bit along the way, right? Because it is at the top and people are cautious. We can definitely see that by seeing the trading range. Now, what is trading range again? Let me kind of recap. So trading range is where buyers and sellers are equal in strength. So that's why it creates a trading range. So people are not willing to, buyers are also heavier, sellers are also heavier. So the fight is equal. Now, once it breaks out of a trading range on the upper side, that means buyers are heavier than sellers. Once it breaks down the trading range, that means sellers are heavier than the buyers. In this case, buyers are still active. Nifty 50 is still in continuous stage 2 continuous setup. So that means market is bullish. But we have to look at it on a weekly basis or a monthly basis to see how it is performing, whether it is creating another trading range. So right at this moment, you should ideally look for different stocks to buy. Now, which stock to buy? For that, we will look at some sectors. Now, let's start and identify different sectors and identify their stages, right? So to start with, let's start with public sector bank. So the public sector bank, which includes SBI, Bank of Baroda, Punjab National Bank, all those public sector banks. So let's see which stage it is currently at. So here, this was the area where it was trading before the time of the pandemic. While the pandemic hit, like any other market, it also went down. However, while the overall market, that is Nifty 50, was performing very good and recovered very fast, public sector bank could not break out of its last resistance area, right? It tried breaking out of of this resistance area back in February this year, but it could not, and it is trading. It is under a trading range, right? And it is very close to its 30-week moving average. And 30-week moving average, while it is still bullish, but I would like to see it break out before I can even consider buying any public sector bank. So this is the thing, right? You cannot go in and buy any bank just because you think it is a good stock, right? You have to look at the sectors. Now, if you have any banks in your portfolio, I'm not saying this is a bad idea because it is still in bullish zone, but compared to the overall market, it is not performing better, right? Now let's look at another sector. That is a mid-cap sector, my favorite. Now, see, I have already drawn some levels, but for the purpose of this video, I'll just delete and create and draw from the scratch. So it is, you see, it is similar to Nifty 50, right? Nifty 50 and mid-cap is kind of similar in structure. So let's discuss. So here, just like Nifty 50, it fell down and broke down of its 30-week moving average, and it eventually break out here and then here, and currently it just came out of a trading range. You see, it was trading between these two ranges, and it eventually broke out earlier this week. So this is a very good setup. Now, since we identified the overall market is already bullish, right? And now the mid-cap sector is breaking out of its trading range just this week. So now you'll have to look for stocks in mid-cap sectors which are showing similar structure like the sector where it is breaking out of resistance, long-term resistance area, or a continuous setup, or breaking out of a stage from stage 1 to stage 2, which would be ideal, right? These are multi-bagger stocks. Like if you're able to identify stocks which are moving from stage 1 to stage 2, while the overall market is bullish and the sector is breaking out of a trading range and showing continuous stage 2 setup, and at the same time, if you find a stock within that sector which is breaking out from stage 1 to stage 2, breaking above its 30-week moving average, it ideally should be a multi-bagger. But market cannot promise you anything, but you have to go with the setup. You have to go with your trading edge, which I've already discussed in my previous video. Whatever the market offers you, you have to grab it and you have to follow your trading setup without making any error. You just have to follow your plan and do not bother about what will happen next. You would see that it will work out most of the time, right? More than often, it will work out for your favor because you're looking at so many statistics and then you're going in to buy a stock. So I'll show you how you can look for different stocks in mid-cap sector right now. Now let's look at some other sector. Let's look at auto sector because I'll show you a different stage it is currently at. So let me remove all the drawing. Now, which stage it is currently in right now? I mean, by looking at it, I believe this is a practice. So you have to practice stage analysis. So you have to look at charts and see which stage it is currently at. And just by simply looking at it, you would know that this is a viable sector or not, right? So currently, it is in stage 3. Why? Let's analyze. So this is the area where it was trading before the time of the coronavirus, and when the pandemic hits, it like with any other sectors, it fell down, and it eventually broke out and recovered very fast, like the market. But see, the market and this is the market structure of the market, right? It is quite bullish in nature, and it is showing in this chart. However, you see the auto sector, it was bullish, but from this range, it started a trading range, right? So it is a long-term trading range. So it started back in February this year, and since then it was in the trading range. And currently, you see the 30-week moving average is flattening out, and it is trading below its 30-week moving average, right? So this is you can see it clearly that this is in stage 2. However bullish it maybe a stock looks within this sector, that would be a trap. That would not be a good buy because it is not performing compared to the overall market. You can see the relative strength also, it is dying down, right? So any stocks within auto sector currently would not be a good buy. It could put it. You could, of course, you cannot tell what a market would do, right? You could eventually find a stock from auto sector and which would give you huge profit. It can do that, but the probability is very less. So this is trading edge. This is clear trading edge, which you can see in the chart. It is in stage 3, and the probability tells you that it does not have much of a chance for any stocks within the sector to perform better than the market, right? So you need to look for stocks which are performing best in the bestest sector or in the overall market. That's how you need to figure out your buys. Now let's look at some other sectors from where we can look to buy some stocks, because the market is bullish and we already identified mid-cap sector which is performing better than the market, and it just broke out of a trading range. Let's identify some other sectors. Let me share a sector which is very lucrative, and I find it it is very interesting to kind of investigate and see how this is performing. This is realty sector. So the realty sector, let me just show you its past picture. So you see it took a huge beating back in 2008 because of the real estate scam that took place in United States. There are a lot of movies, The Big Short. You can see and then learn about this real estate scam, due to which it took a huge beating, right? And it could not recover from that beating since 2009, right? It saw some ups and downs, and some cycles, right? It goes up and down, but it was moving within a trading range. Now, what's happening currently? Let me draw something here. So you see, this is a long term. This was a long term resistance, and it tried to break out of this resistance back in 2018, in 2021 this year, and it eventually broke out, right? It eventually broke out in July, right, 5th of July, and it is in currently in continuous setup. So it took a it saw a pullback, and it is breaking out of this continuous setup, right? Breaking out of this range again on the upside, and it is trading well above its 30-week moving average. Now the risk reward ratio is high. The risk is high. While the risk is high, it is lucrative if you see the long term picture, because it is moving out of a long term stage 1 base, right? So now this is another ideal sector to look at and look for different stocks within this sector, because it is performing better than the market. You see the relative strength is also better, right? So Realty is another sector that I'm looking at in terms of its structure, and of course we'll see different stocks within the sector. Let's look at some other sectors. This is industrial sectors, and you see it also broke out of a trading range. Let me just again show you. It is performing similar to the mid-cap sector, right? It just broke out this week from a trading range. So there are many sectors currently performing better than the market. You see the relative strength is quite high. That means it is performing better than Nifty 50. So while the first step is to identify whether the Nifty 50 is bullish or not, which we identified. It is in continuous stage 2 setup. Then we have to identify different sectors. We'll have to stay away from those sectors which are in stage 1 or stage 3, and of course stage 4. Now let's look at different stocks from the sectors that we have identified, such as Realty, industrials, mid-cap sector. So let's start with industrials, right? And for that you need to go to BSE. Under BSE you would find industrials, and you'll have to look at each of the stocks. So you should not be biased on any of the company. You'll just look at chart, which chart is showing what type of structure, and then accordingly you would decide whether it is a good buy or not, right? So we'll just simply copy the company name and search it on TradingView and see its setup. So as per the setup, you cannot tell, right? It broke down of its 30-week moving average, and it is trying to break out of its moving average. So it is not a good stock to be in right at this moment. So, and I mean, if you try to think of a new buy at this point in time, this is not a good buy, right? Because it is trading below its 30-week moving average. So you can eliminate stocks like that. So again, it is very important to know which stock to not buy, right? Buying a stock is as important as buying a stock, because if you buy some stocks which are not performing good, then you could save some money which you can invest in the right stock and gain some profits out of it, right? So let's look at the second stock, ABB India. Let's look at the structure, and you see it is well above its 30-week moving average, and it is showing continuous setup. Now, in terms of risk to reward ratio, it is trading at a higher point, though it could be a good buy, but you need to learn your risk as well, right? How much you would want to risk for a particular stock is up to your risk tolerance. So we will discuss the relation of when you're buying a stock in terms of your risk tolerance. So if you can tolerate higher risk, of course, then it comes with higher profit. So lower risk, lower profit. So you have to look at risk to reward ratio, which I'll cover in my upcoming videos. So in terms of the structure, it could be a good buy. It totally depends on your risk to reward ratio now, right? As a stock, it is good. As a sector, it is performing better, right? Better than the market, the industrial sector. And within that, this stock is showing continuous stage 2 setup. But again, you cannot just simply go ahead and buy this stock just because I'm telling you. So this is not a recommendation, and I'll not recommend any stock in this channel. So you have to study your own chart. You have to study your stage analysis, and let me know in the comment section on different questions that you have. I'll try to do a Q&A session as well in coming days. If you have any questions, so please put down your question on the comment section, which I can answer on my next video. Or if you have more questions, then I'll create a Q&A session in my upcoming days. So let's look at another stock. And you see, it is well above its 30-week moving average, and it broke out of a trading range, I think last week. So it could potentially be a very good buy if you bought it here, just when it was breaking out of this trading range. See how bigger move it showed from 2000 to it's currently trading at 2040, 2400, right? So more than 15 to 20% gain within just 2 weeks. But not a good buy again, because you cannot buy a stock at this point. Because why? You have to look at your risk to reward ratio. So let me give you an example, and I'll just end it here, because if I go on looking at stocks, the video would go longer. I'll definitely cover some other stocks from other sectors in my upcoming videos. But let's look at this, prime example of where exactly to buy. So when it is breaking out of this trading range, it is an ideal buy, right? Because the sector, on the other hand, is performing better, and it was also moving out of a stage from a trading range. Now, you cannot buy a stock here, because ideally, where you have to put a stop loss, it is breaking out of this range. So you should ideally put a stop loss just underneath this breaking, this breakout level, maybe somewhere here, maybe below this candle, right? So you have to have a risk in place, protective system in place, stop loss in place before you go ahead and buy a stock. So now you see as per the risk to reward ratio, it is it performed very well. Now, if you buy here, your risk should always be below the breakout level, right? You cannot just simply buy here and put in a risk somewhere here, right? It makes no sense. The stop loss should be below its breakout level. Now, if you buy here and if you put in your risk here, you see how much of risk you're taking. If you're buying at 2400 and you're putting a stop loss around, say, 1900, 1950, right? So this is a huge risk you're taking. And upside, though there are chances of upside potential, but the risk you're taking is huge. So the risk to reward ratio is not matching up. So I think this is another important topic which I'll cover on my next video, which is risk to reward ratio. And risk should be lower always when you're looking at buying a stock. Risk should be lower and the potential reward should be higher. I know it was a long video, but I believe it was also informative in terms of technical analysis. It was pure technical. So it must have given you some information on how to look at charts and how to look at different stages within the overall market, different sectors, and different stocks within those favorable sectors, right? So now you need to practice stage analysis, and you need to look at different stocks and see which stages it is currently at, and based on that you can easily decide whether it is a good buy or not. Now, whether you would buy, that's a totally different discussion altogether, because that's when you'll have to look at risk. You have to look at the risk to reward ratio. So in my upcoming videos, I'll cover this very important point, which is to how to manage your risk, and also look at different stocks. When you're going to buy a stock, look at it as in terms of the risk to reward ratio, so that you can make the ultimate profit without risking too much, right? So I would like to request you guys to please like this video and share this content with your friends and colleagues. And if you like my content, please subscribe to this channel. It will motivate me, and I'll see you guys on my next video. Thank you and have a great day. Bye.